morning. You're watching the market right here in 18 with me, Aisha Faridi, Nikunj Dalmia in the studios. For the SGX Nifty this morning, once again, it's a tempered start. We were down about 0.5%, and because of the MSCI rebalancing, yes, yesterday you had a big FII sell figure. So let's see, after just about defending that 17,300 print, where do we head from here? Because the SGX Nifty seems to be indicating that that level at least is going to be well defended to start off trade with. But this morning, the talking points, Nikunj, are all going to be around macros, not just India GDP, but the way the 10-year yield has panned out in just the last month or so, or for that matter, the movement in the US dollar, or for that matter, Brent prices too.
And you don't want this kind of an, macro disruption, if I may, say so. Yeah. When the general view for 2023 was that inflation had peaked out, interest rates will come down, rate hikes will not happen. What do we have? A spike in commodity, a drop in demand, and an uptick in the underlying cost of borrowing, which is the 10-year paper, and a narrative which clearly seems to be endorsing from central bankers that high interest rates are here to stay, and Fed will do whatever it takes to stomp growth but bring inflation down. So I'm afraid as we walk into trade this morning, we will have to deal with the word slowdown. GDP is slowing down. Concerns around how the summer of 2023 would move, they've surfaced up. FIIs are selling, and globally the handover is slightly shaky. So it's not looking.
Yeah, nothing hunky-dory at all. In fact, just talking about the GDP print, Nikunj, while, we may have expanded in the third quarter to 4.4%, but it has slowed down as against 6.3% in the previous quarter. The center also has revised the GDP numbers for FY22 to 9.1% from the earlier 8.7%. The government has gone ahead and kept the GDP estimate for FY23 unchanged at 7%. And it's interesting because the RBI in December, Nikunj, lowered the country's GDP forecast to 6.8% for the current fiscal. Meanwhile, we also have the fiscal deficit data that was released earlier yesterday, which shows that the deficit for the first 10 months this fiscal has widened all the way to about almost 67% of the revised annual estimates.
No, Aisha, the economy is slowing down.
Yeah.
You just cannot sugarcoat that. And if the print is below 5%, which is, there is a seasonality involved for the quarter gone by, but the fact that we are slowing down and the slowdown blows have hit the economy. It is evident that the peak sugar rush which happened post-COVID, that is behind us. There is a dip in demand and there is a big uptick in inflation. From a market standpoint, the worry is that since we are not done with the rate hike cycle yet, and the fact that rates have already gone back to pre-COVID levels and they are likely to accelerate or inch higher, the demand in the near term will remain subdued. So liquidity is getting tight. Demand is getting punctured, interest rates are moving high, and net what it means that you are in a little bit of a jam. There are a lot of data points in the economy which are showing signs of contraction. There are a lot of data points in the economy which are indicating that things in a sense are really off the mark. Now you can argue back and say, okay, we are growing at 4%, the world is growing at 2%. Okay, that's all great. But what the expectations were for FY23?
That's not average.
Yeah.
We're well below average.
Exactly.
But the thing is whether the market has priced in this economic slowdown already, or at least has priced in a major chunk of it already or not.
Actually, the challenge for us this year has been, I'm just looking at the notes in the morning, just look at what all we've dealt with this year. Adani saga, global inflation coming back, interest rates moving higher, and monsoon. Now, typically when you are getting boxed in a corner, it's very difficult to really determine what the market would do in the near term. Why? Because a lot of these factors in a sense were not anticipated. You can argue the mathematical numbers of the market. Okay, the growth of a company instead of 18 is 15, instead of 18 it's 12. That will have impact on the near term price adjustment, the terminal value changes. But when you have to deal with a global inflation concern coming back, and the fact that this year we are in for a harsh summer, which will have impact which could have impact on monsoon per se, I don't think markets were prepared for it. In hindsight, you may argue back and say that okay, markets knew and markets are smart because the markets in last 1.5 years have not given any returns. I completely buy that argument. The froth in the market is not there, but there is no trigger in the market which will generate upside momentum. So what does that mean? That means that we are going to get boxed here and there. There is going to be very stock specific movement. The bias in the market is not positive. The excitement and participation is not there. So I think we will just linger around here and there, and now everything would be pretty much, you will not look straight, you will look up and just pray when the rain and when the summer will start.
Yeah, and going by the IMD, it's going to be a really hot, hot summer. But anyway, we'll talk about that later since we're on the subject of how the day ahead is going to pan out. Remember, yesterday you did see a sharp crack sub the 17,300 print, just about managed to defend that level actually post adjustment. And yes, FIIs continue to sell. Yesterday, of course, it looked like a bloated figure because of the MSCI rebalancing adjustment. But just looking at the delivery-based selling data as well, Nikunj, the Adani stocks, they continue to see very high delivery. Similar is the case with Reliance, which is almost headed to a breakdown. We're almost 2,300 thereabouts in Reliance. TCS, yes, and HCL Technologies, they of course have covered a lot of ground from the lows.
No, it just tells you that FIs are selling, and there are a variety of factors why FI could be selling. It could be because they're going to China, Indian economy is slowing down, earnings have not been as per estimates. Bottom line here is that FIs are selling. Now, up until now, domestic institutional investors have put a brave face out. So 2023 FIs were selling, domestic institutional investors were buying. The problem is now the investors are feeling the heat. They're getting impatient. Now, I can argue back and say that, look, equity markets will not give you linear returns. Please think long term. But when you are an asset allocator, if you are allocating capital, let's say if you're in family office or if you are really looking at asset rebalancing, equity in last 18 months have not given any returns. Mutual funds, about 75-80% mutual funds have underperformed. So the risk of fresh inflows stalling or the fact that mutual funds are likely to protect cash could have an impact on the market sentiment per se. So what do you do in this market? Well, I continue to maintain that do not try and trade this market. It's not been it's not going to be very fruitile experience. Don't cancel your SIPs. I say it again, what is looking like a blown up problem right now, trust me, it will go away 6 months from now, 3 months from now, when the base effect would kick in. And third, I think if one is looking for real leadership in the market, I think the leadership still rests with private banks, it still rests with financials. I don't think it's going to be IT or it's going to be metals.
Okay, that's what the trading day ahead and the few days ahead of that are looking like. But brace yourselves. It's been the warmest February that we've seen in almost a century. Yes, it's the highest February temperature that we've clocked since 1901 here in India. In fact, the IMD in its briefing last evening said the La Nina conditions are weakening during March to May and El Nino effects will be less in the coming months. So while it's going to be a few hot months ahead, it seems like monsoon is pretty much on track. Also that the maximum temperature was above normal in most parts of the country. That is what IMD is forecasting. So Northeast India, East India, Central India, parts of Northwest India are all going to have above normal temperatures, something we here in Mumbai are already grappling with.
No, Aisha, well, you cannot make a case that right now we are in for a deficient monsoon. The problem with this El Nino current is that historically when we've had it in last couple of years, and I was looking at the UBS report, it has had an impact on the rainfall pattern. Last couple of years we've been blessed with good monsoon and we've been blessed with not El Nino but La Nina, which in a sense has really favored a very strong to above average monsoon. So if historical data is anything to go by, and if we look at the weather patterns, it's not great news. And it is coming at a time when inflation in general in the system is high and the rural demand is getting punctured. So I really hope that it's a hard summer but not a tough monsoon. But scientifically, if I look at what the evidence has been based on, like I said, last weather patterns, it's going to be a tough 2023 to call. While hot summer is something which will have its own implications, we'll talk about it. But the UBS report, I think, is talking something very nice, that every time El Nino current has happened, it's had impact on the monsoon, at least monsoon distribution.
Okay, and expect a heat wave in central as well as the northwestern areas in the country. Let's move on and let's tell you what else is lined up on the show this morning. And staying with the new age tech space, we caught up with Sanjeev Bikhchandani and Dipinder Goyal to talk about Zomato and what makes the InfoEdge founder so confident that they remain the largest investor in the company.
We are long-term investors, so we don't even track our own stock price daily, right? So the conversations we have are not about the stock price. The conversations we have are about what's happening in the business, what's happening on path to profit, what's happening on growth, what's happening with competition, what's happening on any new initiative, what's happening on Blinkit. So we have operational discussions more than financial discussions.
You've not pared down the investments in Zomato, while other anchor investors, other big investors have bought their stake down. You're still the largest investor in Zomato. What gives you the confidence that this is an investment which already has been a multi-bagger investment for you, could still create wealth?
So look, I'll be unfair to InfoEdge shareholders if I say we'll never sell. We are constantly alive to the issue.
Sir, you will sell one day.
Of course. But as long as we believe there's a future and there's growth, and I see no reason to sell unless we need the money for something else, right? And that's what. But obviously, we discussed with the board, but there is no announcement we made here on this account. But I do believe that if there's growth, we should stay.
What gives you the confidence? You're speaking about the growth part. That growth is real. There are a lot of businesses which start young, but it's only when they start growing up, the base effect or perhaps the need of that business gets challenged. Now, for you to grow, there are two things which is important. You have to solve a need of the society, which you're beautifully solving, but also pricing power and efficiency. What gives you the confidence?
I think the confidence which I get is from the behavior of the customer over time, right? I think there's a lot of people who are just starting to interact with restaurants. So, and I think maybe 70-80% of the base is right now 4 times a year kind of a frequency, which is doubling. That gives me the confidence. Even if we don't add any new people to the platform, even then we are going to continue growing for the next decade. So we're just at the early, I think it's a very, very early stage business right now.
Why is that startup founders have this maverick image?
Startup founders very often tend to be young. They don't wear suits and ties to office. Do you possess a suit and tie?
No, I don't.
You don't have a suit and a tie?
And I think given the recent news, there are so many large companies which have been taking maverick type calls, right? So it's not necessarily up to us. So it's just a young versus old image, I don't know.
So look, when you don't conform stereotypes that society has in the past, expected from people in business, you're called a maverick.
All right, lots lined up today on the show, but let's touch base with our chartists then and find out what exactly they are advising, given the fact that yesterday we were taken aback by that surprise fall in the markets as we wrapped up the day around the 17,300 mark. Kunal Bothra as well as Naresh Mirani joining in. And Kunal, we actually did breach the 17,255 mark, if I'm not mistaken. That was the kind of low that we hit in yesterday's trading session. You had a whole recommendation on the index yesterday. What's the advice today?
Good morning, Avan. So yes, we had a whole recommendation expecting the markets to get into that further correction from that 17,300 levels. But then the bounce back in the second half for the indices as well was quite interesting because the Bank Nifty also made a strong comeback for itself in the second half, and specifically we managed to come back towards the a slight flattish territory on the Bank Nifty. Now the data in the last 2 or 3 days, specifically on the candlestick pattern, indicates that Bank Nifty could start to outperform. It's formed a big base at the 39,500 550 mark on the spot level. So, and those lows have not been tested. But on the other hand, Nifty has been making a pattern of lower lows for itself even in the last 4 days. So I would expect some resilience and outperformance to come back into Bank Nifty, and possibly Nifty can underperform or at least stay into a range just around that 17,300 mark.
All right, a range around the 17,300 mark. That's the outlook from Kunal. Naresh, what is it that you're penciling in for the index? Do you think yesterday's fall sort of opens the door for a further downside? Is there a scare that we could see that, or do you believe that we'll just sort of gyrate in a range?
So the drift has been a little too much over the number of days. Over the last 8 sessions, we've continued on the lower end. RSI is back to 30 levels. Now, the problem is the last 2 times you went oversold, we bounced back pretty quickly. We did not even go to 30 RSI, but this time around we have drifted a little lower. So the case here is at these prices, the risk reward is no more left for shorting. It is still continued for buying. But we got stopped out on that Monday tick below 17,400. So for now, waiting for a reversal signal in a sharper way. At these prices, would only be looking out for buying on the reversal rather than selling at current levels. Because what we've started seeing is Nifty has broken the lows, Bank Nifty is not. The broader market continues to be very, very selective. So for now, waiting for a reversal signal, but we've gone into the oversold stage for all the indices.
Okay, let's talk stocks then. Kunal, a short bias today?
No, not. In fact, long bias on banks. So 2 buy calls on the PSU banking stocks. So I would believe some recovery as well as rally could probably shape up over there. Bank of India is a stock which did pretty well for itself. So that's a buy, targets of 75, stop loss at 67. And Bank of Baroda has also been holding up quite well from the 155 support for the stock. Yesterday, I think the stock scaled up above 160 levels. So would suggest a buy, targets of 170, stop loss at 155.
Oh yes, a Morgan Stanley upgrade as well coming in for Bank of India. And BOB, of course, made it to the MSCI inclusion list, and which is why you had such high delivery and high volumes as well in BOB yesterday. Naresh, what's on your list then, stock specific?
So continue to be a bull on all gas names as well as power related stocks. So first is a buy on GAIL India. The stock saw a quick move very recently after the breakout in the last 2 sessions, and has seen a correction yesterday, giving a fresh entry point. So the stock broke out above the 96-97 mark, went to 105, 106, is higher than the last 6-month highs. So this dip at 100, 103 is a good zone to buy again. A stop loss at 97, expecting it to go towards 115 mark, which is the high for the last 1.5 years. Longer term trends much more positive also going forward after that. Second is a buy on Indian Energy Exchange. This is a stock which has shown a lot of resilience in the near term. So if you look at the stock has corrected 50% from the top, almost closer to 300 price last year, and now the stock is quoting at 140 odd levels. In the last 3 months, a strong base made around 130 to 35. Short-term breakout we saw last week about 135 to 138 to 140 mark. For the last 4 sessions, it's making a classical flag formation, which is a continuation pattern, which is where we expected to make a fresh breakout about 146, go towards the 170 mark. So, like the stock at current levels, the stop loss at 140 and a target price of 170.
Okay, Kunal sticking to the PSBs and Naresh has picked out GAIL as well as IEX. Well, let's slip into a quick break, and as we do that, hear it out from Ramdev Agarwal, who says that the IT story is much better than we think. The chairman and co-founder of Motilal Oswal says that the largest profit pool lies in the Indian corporate world. Listen in.
Right now, the largest profit pool in India, which is growing also, is that of banks, financial services, and second is IT. IT has had the most dramatic profit pool expansion from 2000. In 2000, it was not even a percentage of the total profit pool. Today, it is more like 15-17% and growing. And there is no year when it has not gained little share. So, my sense is IT story is much bigger. You don't have to stick to the current set of those top big companies. They might give you 10-15% index return or something like that. But below that, there will be a lot of companies which will try to come into the big league. So there will be mid-sized companies which will, because their economics still remain great. And then you have the new set of kind of small companies which are coming up, product companies, AI companies, and so there will be specialized services companies which will be coming up, where the cost structure is in India and the clients are all in US and Europe. So I think that business model has huge potential. We have done in last 20 this is a 23, 24 years story of Indian IT. And first $100 billion took about 20 years to get it, and next $100 billion came in just about 8-10 years. The third $100 billion, I'm not talking about a small number. Third $100 billion, I believe, is going to come in 4 to 5 years. So that's the nature of expansion, and there the players who are going to be disproportionately large, I think they'll make it, and we should be aligned to that.
Back with the market right here on ET now, the SGX Nifty indicating a flat start once again, but who knows where we head from that flat start. Fingers crossed on that. But this morning, of course, the market is going to be trying to digest even the macroeconomic print that came by yesterday. The fact that India's GDP growth for the third quarter of FY23 has slowed down to 4.4% as against 6.3% in the second quarter. Also, the centre has revised the GDP numbers for FY22 to 9.1% from the earlier 8.7%. The government has gone ahead and kept the GDP estimate for FY23 though unchanged at 7%. And it's interesting because the RBI in December, remember, lowered the country's GDP forecast to 6.8% for the current fiscal. So what does this data really imply, and how is it that you should be reading into it for market watchers? Let me take it across to consulting editor Maithili Pusnarmat for her take.
Well, this evening, the National Statistical Office released the GDP numbers, the gross domestic product numbers, both for Q3 of the current fiscal, that is October to December of the current fiscal, as well as the second advance estimates for the current fiscal. Remember, this data print is very important because this is the time when the CSO, or rather the NSO, revises numbers for previous years also. So we actually get not only the latest numbers for Q3 and the second revised estimates for the current year, we also get revisions for the past 3 years and the previous 2 quarters. So overall, what does it say about the health of the economy? Well, it seems to suggest that, well, the economy is in reasonable health. There is a slowdown, but overall the NSO has stuck to its first estimate of 7.0% GDP growth for this fiscal. Remember, the RBI had lowered its own estimate to 6.8%, but the NSO, the National Statistical Office, clearly does not see any reason to lower its estimate, so stuck to 7%. The third quarter, for which numbers were also released, GDP has come in at 4.4%, marginally lower than the earlier estimates, about 4.6%. The most disheartening number in these estimates, if we look at the disaggregated picture, is that manufacturing still continues to show a contraction. In the third quarter, manufacturing contracted by 1.1%. One can take comfort from the fact that this is a slower contraction as compared to the previous quarter, but that is really clutching at straws. The good news, of course, is that agriculture continues to do well, but here we have to keep our fingers crossed because the kind of heat waves that we're seeing in the north doesn't bode very well for agriculture going forward. So overall, the numbers are reasonably good. We have to keep our fingers crossed that agriculture continues to hold up, and the export slowdown that we are seeing because of the global slowdown and the impact on growth because of higher inflation, both do not make their presence felt very much. Particularly if you look at gross fixed capital formation as a share of GDP, that number has come down as compared to the previous quarters. So that really it's a mixed bag really, but overall nothing very alarming, but nothing too cheerful either.
Nothing too alarming, neither too cheerful either. That's Methley's take on the GDP. But moving right on then, Federal Bank in the news. They've held an analyst meet where the management has said that they aim to improve the return on assets by 10 basis points each year towards 1.5%. Let's get in Harsh, my colleague who joins in with those latest highlights. Harsh?
Well, yes, Avan, on top of that, they're also looking to double the book and maintain that high teen growth with regard to the loans that they're continuing to disburse, and they're expecting that to continue through to FY25. Their goal is to be one of the top 5 private banks in the country, and that they believe will be led by branch expansion and a sustained focus on fintech startups and a sharper digital thrust. And those, they believe, will be key growth enablers for them going forward. Now, in terms of what the equity raise will look like, they're expecting to raise some money in calendar year 23, and they believe that net worth would double in the next 3 years. So they're extremely keen with regard to retaining the human touch in the banking system despite the heavy digital investments. Now, in terms of Morgan Stanley, they have kept a buy rating on, or rather an overweight rating on Federal Bank with a target of 175. They believe that the focus to shift towards higher margin loans will aid ROAs going forward, and they believe that the ROA growth of 20 bips over the last 3 years has been consistent and solid. They further expect ROA growth on the back of an improved loan mix. So they too are positive on Federal Bank, and some commentary coming through from the management as well.
Right, okay, Harsh, we'll leave it at that, and let's now talk about the weather gods. And it seems like it's a harsh summer that we're going to be staring at. That's what the IMD prediction is. So let me welcome on board K.S. Hosalikar, the scientist and head at the Pune department of IMD, joining in on the show right now. Mr. Hosalikar, thank you so much for taking the time out and joining in on ET Now. Firstly, wanted to understand how bad could it get in the coming summer months?
Yeah, as far as the forecast which is given for the summer outlook, yesterday by IMD, we have said that the maximum temperature would be almost at all the places above normal, except the parts of the some parts of the Maharashtra and some parts of the southern peninsula. So the summer is going to be on a higher side with the above normal temperatures at both in the eastern part, northwest India, northern part, and east central India also.
IMD yesterday in the summer forecast also indicated that they expect the effect of the El Nino current to come down. Could you quantify what is the indication when you say that it could come down?
You said about El Nino?
Yes, because you've said that the El Nino effect should fade away in coming months.
No, it's not El Nino, it's La Nina, which is weakening from the October. We have a triple dip La Nina, which is one of the unique case as far as the climatology is concerned. So we continuously had 3 years of La Nina, which is favorable for the monsoon season for the India. But from October onwards, the La Nina conditions are weakening over the equatorial Pacific Ocean. And the climate models are also suggesting that there's a possibility of development of El Nino also. But there is a rider on this, that the predictions made in the month of February or March for the ENSO conditions, that is the equatorial Pacific temperature SSTs are there. The uncertainty is there and the skill is not much. We call it as a spring barrier. So we need to watch it, and we will give the update, better update for that in the month of April. The spring barrier is something that will prevent us from very accurate forecasting. It's a global issue.
Mr. Hosalikar, historically we have seen that when the El Nino effect has been there, and I'm looking at a UBS report which maps the last 30 years, where 3 times the El Nino impact has been there, it has had an impact on the monsoon distribution. So can I say that this year we could be in for a bad monsoon or a poor monsoon, or there could be a challenge with the monsoon distribution?
Yeah, this is a good question. I'll answer it in two parts. First is, I have a data with me from 1951 to 2022, and it's almost like more than 70 years old data. And there were about 16 cases when El Nino was there. And out of that 16 cases, there were 9 cases when it affected the Indian summer monsoon. So what it indicates that every time when the El Nino is there, Indian summer monsoon did not get affected. This is number one. So that fear of 1-to-1, El Nino is there and the monsoon is going to get bad. I think we need to, we need to have more clarity on this. Number one. Number two, the monsoon depends not only on El Nino, but it also depends upon many other factors like Indian Ocean dipole in the Indian Ocean, the Eurasian snow cover. And because we are in the tropical country, the local weather also affects during the monsoon season. So there are various other factors on which the performance of the monsoon depends. Now coming to whether this will be a bad monsoon or this will be good monsoon, I would suggest Indian Meteorological Department said it very clearly that we have to wait, because the current ENSO predictions are having a trouble of the spring barrier. That's at this time of the year, when we talk about the El Nino predictions or ENSO prediction, the uncertainties are there, intrinsic uncertainties are there because of the low coupling of the ocean and atmospheric over the equatorial Pacific. So we have to wait for some more time, for having the more clarity whether the El Nino would be there or at what time it would be there. Currently, it is suggesting that it would be at the end of the monsoon season, but we need to wait for more clear picture on El Nino.
Okay, my next question, sir, is that when we've seen this kind of an El Nino current in the month of Feb and March, what has been the divergence? How much the divergence has been there in terms of the initial assessment versus what actually is the final outcome?
Yeah, currently, I think, again, what I was trying to tell, to all my viewers is, currently, even the current predictions are also indicating that there could be the La Nina conditions are becoming, or the ENSO conditions are becoming neutral in the summer monsoon. That is during this March, April, and May. And later on, I think it is going to have some effect of development of El Nino. There are years like 2012, I remember, like this, the predictions were there, but then there was no impact of that. So it all depends upon, it's not only the El Nino, but it depends upon at what time, its peak would be there, whether we will see it during the summer or later part of the monsoon. These are the things which will also, have a lot of impact on the summer monsoon. And it is not 1-to-1. That is very important. I think all viewers should remember also, please.
So just want to understand, when it comes to summer, if you could reiterate for us, is there a high probability of the occurrence of a heat wave during the months of March to May? How bad could it get for some of the states like Rajasthan, for places like New Delhi, etc.?
Yeah, we in the month of February, we have seen, a lot of temperature rises in the part of northwest of the India, Konkan, central part of the India, that is including Maharashtra. We saw temperature soaring up to 37 to 39 degrees centigrade at many places in the beginning of February. Yes, later on it got stabilized. The prediction for the March, April, and May that we have said, that yes, there is a good possibility that the heat waves, the heat waves could be, enhanced conditions of the heat waves as possible in March, April, and May. We have also found, yesterday submitted what could be the heat wave scenario in March. March, it is not indicating that number of heat waves as compared to the rest of the season, like March, April, and May. So what is expected probably is that the season could pick up with the more number of heat waves in the month of April and May. That is what the prediction as far as. Of course, monthly, weekly, and daily predictions also could be available during the course of time.
Just one final question. It was a hard 2023 summer also, and it's going to be a hard 2020. 2022 was hard, and 2023 could also be hard. Is it all about global warming, the most talked about debate? I mean, are weather patterns changing because of global warming?
Yeah, I think now, if you see the February temperature, to just give you the glimpse of it, the average February temperature at all India level was about 29.5 degrees centigrade. That is the highest temperature in the February for last 122 years for all India level. It's number one. So February literally remained very warm, at all India level. Even the minimum temperature, remained warmer at number 6 for last 122 years of data as the whole country. So let us accept it that, we are living in a warming environment. And yes, the climate predictions are also stating, global climate predictions are also in that line only, where the temperatures are going to rise. Yes, 2022 was March, especially, I remember there were extraordinary heat waves, especially in the northern part of the country. In northwest Rajasthan, even Gujarat also had a number of heat waves. Temperatures were above 40 at many places. But this year, we are expecting that March would not be that harsh as, in the coming time. But maybe April and May, we need to keep watch on the heat waves and the rise in the temperature.
Well, that's a really appreciate time. You've wonderfully taken out time early in the morning, and you've just broken the news for our viewers. Really appreciate that.
Thank you.
Imang Jani, good morning. Are you ready?
Yeah, good morning, Nikunj. Yeah, all set.
भैया जैकेट मत पहनो, समर गर्म होने वाली है. Get ready to wear sunglasses on even television show and with a t-shirt.
Yeah. I'm that. Let's see how the summer goes. Hopefully, it will not be as harsh as people are predicting to be.
To the IMD forecast. I mean, we knew that it's going to be a hard summer. Everybody knew, let's say 10 days ago, that the El Nino effect was at play. Has something new and different come from IMD's forecast yesterday, which is new for the markets?
I think, Nikunj, it's a little early days, at least in terms of predicting the monsoon. People do have some concerns about the El Nino effect playing out, and after a consecutive about 4 monsoons, maybe there could be a risk of below average monsoon. But I think a little early in terms of the market, because unless we get into, let's say, April end or May end, it would be very difficult to gauge, and market would not start, looking at that. I think at the moment, what market is concerned about is the kind of slowdown that we are seeing in the overall consumption space, and the global backdrop not being so good. So that is something which is affecting the market sentiment, and we've seen that both US markets as well as Indian markets are grappling with some sort of a slowdown and a very boring kind of a grinding movement which is happening. So I think we have to just wait and see how things shape up and look out for good opportunities because of the correction that we are seeing.
Right, stay with us, Hemang. Lots more to talk about, summer bets and all that. In fact, speaking of that, Chakri Lokpriya ran us through his outlook on what could be some of the stocks that could be in the spotlight on the back of the sweltering summer.
I think, in addition to Voltas, we would also buy a Crompton Consumer. The stock has corrected significantly, and it has had its fair share of problems. And they'll also benefit from some kind of consumer spend. Symphony is another stock which traditionally does well in any summer. And of course, while it is not really a summer issue, but I think some of these companies like Thomas Cook and Mahindra Holidays will benefit from the summer travel. So I think basically it is Voltas, Symphony, Crompton Consumer, and the hotel company.
I'll get down to what's happened to Adani Group of stocks. And Kunal, I think we've discussed this. Now, for our viewers who wanted to understand the Adani Group of stocks technically, they were extremely overbought in January after the run-up in 2021 and 2022. After this entire crack and the recent bout of volatility, as a cluster, technically, where do they stand now?
So three different stocks. So even if we discuss Adani Ports,
the data, right?
yes, Adani
Okay, let's
Ports,
look at the data, guys.
Adani Ports, Adani Enterprise, and Ambuja Cement, and three distinct kind of data points for all three names. For example, for ports. So now we try and compare this from the Jan end lows or the Feb start lows for these stocks. Adani Ports has recovered from 420 to 590. That's price recovery. The open interest data is intriguing because for Adani Enterprise there has been a dramatic drop in the open interest, and I'm talking of from an average of 6.5 crores of an open interest to 5.5 crores. So that's a significant drop of 20% as a net drop for Adani Ports as an open interest. This indicates that short players who were shorting the stock earlier in the second half or in the fag end of the month of January, they have majorly unwound their positions. Now we come to Adani Enterprise. There has been a dramatic increase in the open interest in the entire month of Feb series and even the start of the series of March. And that increase is more than 25 to 30% than the earlier average of the month of January as well as before that as well. And the prices, if you've seen Adani Enterprise, after a 2 or 3 day bounce, the stock from 2000 fell back again to I think 1100 or 1200 mark yesterday, day before. So that indicates that short players are still very much bearish on Adani Enterprise. Now Ambuja Cement on the other hand has not seen any major change in the open interest. So from a 6.3 crores as an OI, the OI has dropped to 6.1 crores, and you look at the net resultant impact into the stock has just gone into a beta of 10%, 15%. So 350 plus or minus 20-30 rupees is where Ambuja Cement has been trading. So three different data points, and all of them indicate that Adani Ports is the stronger one. The stock has emerged as a strong candidate of short covering. Adani Enterprise is probably a stock where traders are still confident of shorting the stock at every highs, and Ambuja Cement is more of a stock which is getting into delivery bias rather than more on the F&O side.
Okay, that's an interesting analysis basis the technicals on the volatility that we've seen in the Adani group of stocks. Meantime, wanted to get in your views then, Hemang, as to how you've read into the kind of commentary that's come in from the Federal Bank analyst meet takeaways, speaking of the entire banking space as well. What's your outlook now as we're seeing the culmination of Axis's acquisition of Citibank and what it could mean for the consumer business?
So yes, Federal Bank, the analyst meet, there were positive takeaways. I think the ROA guidance and the overall strategy that the company is trying to put in place is surely, positive. And we feel that if you look at last 2 years, there is a marked improvement in the overall data in terms of the loan growth, the NIMs, and the way the company is actually foraying into the digital footprint. That should definitely help. We like the bank, and we feel that next 2 years the company should deliver about 16% kind of a growth, and we have a price target of 170 for Federal Bank.
Okay. Naresh, Z, yes, no, or I don't know. Everybody's telling me I don't know these days about Z.
So I would say no, because the stock is back to the place where it started from. So not really interested now. There were some hopes at 220, given up on the hopes of a bounce back. For now, it's the worst performing stock in the overall, say, a larger mid-cap space. The stock is available at lower prices than it was in June 2020. So it's a no as of now.
Hemang, I go back to that summer of 2023 trade. Would you buy an air conditioner? Would you buy a beverage company? Would you buy a fan company, or would you buy a company like electricity? Because if there is more heat, that means there is more electricity demand. We all will be cooling our houses and offices. So what is your trade of summer 2023? It's like that, you remember the Bryan Adams song, Summer of 69? So what is your trade for summer of 2023?
Yeah, I like the way you put it across. I think for summer, yes, I mean, it does provide, 5-10% kind of opportunity for names like Voltas and Blue Star. Remember that Voltas actually did a little better in the last few days purely because of that. But Nikunj, what we must understand is that this could be just a 5-10% kind of a pop or a very small trading opportunity. But looking at the kind of slowdown that we are witnessing across the consumption space, it is not actually looking that great. So one is really not looking at a very sustainable kind of a rally in these names, and one should stick to 5-10% kind of a move. Varun Beverages is something that we have been liking a lot, and the company has delivered good set of numbers. So genuinely, if I really want to participate in the summer theme, definitely Varun Beverages would be on the top of mind, because that's more like a structural story, more products, more geographical presence. The stock too, after the MSCI part, has corrected a little. So I think it does provide a much better risk reward at this point.
Varun Beverages, that seems to be the stock that really stands out according to a lot of our fundamental experts, including Hemang. Meantime, let's also get in a take as to what the outlook is when it comes, Nuresh, to Lemon Tree Hotels. That stock had a pretty decent run-up in yesterday's trading session, and you also had Uflex, which soared about 7%. Are you spotting some sort of a trend on the charts here?
So Lemon Tree looks interesting from a medium-term perspective. Yesterday was a single day, but if we look at the price action, and the stock has corrected well from 100, 105 levels down to 72, 73 was the base. It made a bottom in December around those levels. The last time the stock was at 65, 70 was pre-COVID. The stock had made a top around 65 levels. So that was the first trend change, and 65, 70 was the resistance for the whole of 2022. So we are making a base around that 70 mark, which is a very strong support. And from here on, I would expect a slow and steady move towards 100, 105 levels. So it's a buy at current levels, so with a stop loss at 70. And say add more on the way up when it can sustain about 83, 85 levels.
Pankaj is ready. Pankaj?
Right. So delivery.com will be in focus today, and it will be once again the supply that's we are picking up. What I'm also picking up right now is that just about 2-3 minutes back, this particular deal has got concluded. As far as the block deal window is concerned, which means the demand should be decent. Now, who is selling? SoftBank, which has about 18% stake, is selling about 3.4%. Citi is the sole book runner. They're giving a 3% discount. More importantly, it's not about who's selling or how it's happening. It's just supply in some of these new age companies which have got listed. I mean, delivery was at 300, it's now at 350, and you're seeing a supply of about 4% coming in. So every 3-4% up, there is a seller in these particular companies, and that continues to be one of the key concerns. 800 crores should be the block. Close to 800 crores, about 3.4% is what they are looking to sell, and SoftBank owns about 18.5. However, once this block deal, if and when it gets concluded, there will be a 2 to 3 months lock-in on the existing seller, which of course is SoftBank.
Okay, there you have it. That's the ET Now Khabar coming in with respect to delivery. So watch out for that stock. In fact, let's get in a view then, Hemang, as to what your outlook is, delivery with respect to the kind of news flow that we're seeing with SoftBank offloading stake, the kind of commentary as well that we've got incidentally from Nikunj's interview with Zomato, where they're very confident of growing the business as well as achieving the $100 billion revenue down the line. What's your take?
So, Avan, I think, the management commentary over the last few months has definitely improved. But very frankly speaking, now that, these companies have gone through so much of a de-rating in the market cap, now whatever the management says in terms of the numbers for next 5 to 10 years, people will take it with a pinch of salt. I think one will have to go with very realistic kind of assumptions, and it must be more based on the data points rather than just a wishful thinking. So I think when we look at delivery, the market cap of the company, even after seeing such a big correction, is about 25,000 crore, and the company does a quarterly sales of just 1,700 crore with no profit whatsoever. So does one really believe that there is going to be a significant turnaround? I'm not too sure. I think some of the new age tech companies like Paytm or Nykaa or Policy Bazaar, because of the slightly incremental management commentary, may provide a 5, 10, 15% kind of a trading opportunity. I do not think that the market is really looking at a very sustainable or major re-rating for these companies, at least from a 6 to 12 months perspective.
Right, okay, let's move on. And it's the first of the month. So remember, you'll have monthly auto sales data as well for the month of February come by. Let me take it across to Srishti. Find out who's going to win and who's going to lose. Srishti?
Well, when it comes to the auto sales data, let's talk about the segment-wise performance. And let me break the surprise for our viewers that this time around, two-wheelers can actually surprise you, because a slight improvement is what we are expecting. Two factors contributing to that. Firstly, the wedding season and the weddings that happen in the northern part of the India, that is expected to support the two-wheeler space. And not just that, if you look at the urban demand, that is also expected to flare better, and especially in comparison to the rural demand. So both of these factors should help the two-wheeler recovery. And if you will see, this is the only segment where we are expecting a sequential growth in comparison to the rest of the segments. Onto your screen, you will look at the numbers of Hero MotoCorp, TVS Motors, Bajaj Auto, as well as Eicher Motors. They will tell you the story. And not just that, we'll also look out for the numbers of exports data when it comes to the TVS as well as Bajaj Auto numbers. Apart from that, coming to the passenger vehicle segment, what the dealers are highlighting that there has been an 8 to 10% decline in the inquiry levels, but nevertheless the demand on ground is still healthy for all these companies. On a month-on-month basis, we are expecting just a single-digit decline, so we'll be watching out for the other commentary onto the booking side when it comes to the management commentary. Coming to the other space, that is the commercial vehicle segment. Here too, we are expecting a single-digit decline. And lastly, talking about the tractor segment, two factors will be at play. Firstly, like we told you, that the rural demand is not that aggressive, what we are finding on ground. And apart from that, what the agri sentiment is holding right now, they are fearing a severe heat wave coming ahead for India, and that is why the sentiment is not that great. And if you look at the tractor numbers, then for M&M, we are expecting a decline of around 17% on a month-on-month basis, while for Escorts, we are expecting the sales to be around 7,000 of units. That will be a jump of just 5%, but other than that, we'll also be watching out for commentary. So apart from all the numbers, key to watch will be two-wheelers this time. Back to you.
Just looking at the screen, and there's just nothing which is indicating that it could really, generate upside momentum. We spoke about Bank of India yesterday, and it did well, rather well, in otherwise very falling market. When Morgan Stanley report, I love the confidence. There's 80% probability next 60 days Bank of India will actually outperform, and guess what? It outperformed yesterday itself. We identified this one for a few. Kunal, Bank of India.
Yeah, it looks attractive. In fact, after yesterday's candlestick pattern, most of the PSU banking stocks as well have started to get into a recovery phase. So, we were discussing this a couple of days back that it's better to wait out for 1 or 2 days of confirmation that these stocks are have started to move in a synchronized manner. So yesterday we saw Bank of India, PNB, Bank of Baroda, I think Canara Bank, SBI, most of these large caps, mid cap names from the PSU banking stocks, they've started to get into recovery phase. These stocks have broken at least a chain of a consecutive price correction for themselves. So breaking past about the previous day high or a 2-day swing high is a strong enough confirmation that an immediate trend on the downside is arrested and the stock would get into a recovery phase. Now the recovery could be different for different stocks. For example, the ones which have fallen by 30-40%, the mid cap names, they could probably get into a very slow and a gradual recovery. I don't expect a V-shaped recovery over there. But for stocks like Bank of India, Bank of Baroda, SBI, the recovery could be not just swifter but a bit more stronger as well and durable for these stocks.
Hemang, your outlook on the auto space, given that we'll be watching out closely for the Feb auto sales numbers, do you think that we could see two-wheelers come back on track? Incidentally, you've also got CLSA's note coming out on M&M. They've upgraded the stock to buy, saying that there's strong momentum in the farm as well as the auto business. Would that be one of the favorites?
So, Aman, I think auto as a sector is holding out pretty well, but two-wheeler, we had this recent data point from Bajaj Auto where, due to the concerns on the export side, they're going to cut down on the production, is not holding well. And otherwise, also two-wheeler as a space has not done so well. So we are not really too positive there. But I think names like Maruti, Ashok Leyland, Eicher, these are relatively better placed. So we do think that this correction provides a good opportunity. At the same time, we are seeing a cool off in the metal prices. Aluminium, copper, So maybe to some extent in some of their parts there could be some improvement because of that also. Overall, we are quite positive on the auto space.
Hemang, or rather, Kunal, I want you to read the charts of both an M&M, a TVS, which has been a big mover all through last year, Bajaj Auto, significant underperformance there, and then, of course, concerns around the production cuts as well. We saw how day before the stock as well got, sharply sliced, or on Friday for that matter. And then, of course, Tata Motors, which continues to be your favorite, I guess.
Well, yes, Aisha. So I'll start off with M&M because that's a stock which has been, I would say, one of the leaders in terms of the price performance from the auto pack from the 700, 750 lows in 2022 first, I think, quarter or so. The stock has done exceptionally well. Yes, in the last 1 week, the stock has gone to a 10% correction, if I'm not wrong, from 1380 to 1270, 1260, somewhere the stock has fallen. But then again, I think I would probably sense that this is more to do with mark-to-market selling for a stock like M&M rather any kind of a major trend reversal. In fact, I think it's very, very close towards testing its 200 moving average on M&M. Compare this with TVS Motors, the stock has just gone through a very shallow recovery, shallow correction. Last 4 or 5 days of very mild profit booking for TVS Motors, a 5% correction. Bajaj Auto, on the other hand, I think is a case where the stock was getting into a recovery phase for last 1 month. The stock went sideways at 3,900 odd levels. But then after yesterday's price correction, it indicates that the sideways price action would probably result into a corrective phase for Bajaj Auto. So any hopes of recovery were dashed after yesterday's price action for Bajaj Auto. So the mood for the auto stocks is still a bit mixed on the large cap peers. M&M, I would still believe, is a good buy on dips. Even at this 1270 odd mark. TVS Motors could be a stock which can get into a very slow, steady or a gradual recovery. Tata Motors is a stock which looks very, very strong about this 400 mark. And Bajaj Auto, Hero MotoCorp are the ones which look extremely weak.
Okay, what are we tracking for you on the channel? Let's look at that. I mean, what are the 4 things which you're tracking for you on the channel? Just tuned in. I mean, these are the headlines which are important today. Wall Street last night ended on a weak note. Nifty has closed almost at 17,300 in and around here and there. That may just stay on for the first at the open at least. IMD warns of heat wave, so be ready. You need to buy shorts, t-shirts, sunblocks. We are going to be that kind of an summer season this year, but the high on auto sales would be crucial because if the economy is slowing down, then why autos is doing well. And then you got Ramdev Agrawal and Samir Bichchandani, 2 very special guests who would be talking to us about variety of themes and subjects. One startup, second real old school classic way of investing, the Warren Buffett way. So you've got a real very interesting mix. A startup investor and an old economy investor. Hemang Jani, where are you? A startup or old economy?
I think, Nikunj, if you look at the trends, the bond-based and the algo-based, traders, though we are not often talking about them, but they are the ones who are making a big difference to the actual performance. And while the markets have been so sluggish, and most of the fund managers and investors are struggling to generate any kind of returns, forget about alpha. Some of these smart bond-based guys, they are actually generating exceptionally good returns irrespective of the market. So I think the market is moving towards the technology-based trading, and the kind of model or the logic framework that we think of, given the opportunity which is there in the market, both options as well as the normal market. That is where I'm really inclined, and I think there is going to be a big headway, because of the new norms that SEBI is going to come out with, and the fact that they can, have a good, returns irrespective of the market.
Right, okay, Hemang, always good to have you on the show. We'll let you go on that note. Lots of stocks to talk about, but let's also get in some more trading ideas. That, of course, is the pre-open rate. Once again, it's going to be a very, very quiet start. The only good thing is that at least we're going to manage to defend that 17,300 print, fortunately. But time for some more strategies. Naresh, what's on your list?
So that would be a buy on Mahindra and Mahindra Finance with a stop loss at 245 and a target price of 280. Now, if you look at the stock, it recently gave a breakout in February above the 245 mark after testing that level for quite some time. Saw a big tick towards 270 levels, and now we've come back to retest that zone of 245, 250. That's a good entry point at current levels. The risk reward is favorable, and it remains the relatively the best performer in the NBFC space. So expecting at these prices, the risk is small, and expect a new move towards a new high. So a buy at current levels, the stop loss at 245 and a target price of 280 plus.
Let's get your recommendation.
So from the gas stocks, a sector which I've been bullish on, I think GSPL is something which looks very attractive, breaking past about 275.77 hurdle, which is a flag pattern completion for GSPL. So would suggest a buy with 320 as a target, stop loss 260.
All right, let's get a move on then. Those are your mid-cap trades, but here are some of the other top headlines that we're monitoring on the channel. General Motors is cutting around 500 employees, as it's said to be following other major companies that are downsizing headcounts in order to preserve cash and boost profits. The job cuts are taking place across various functions of the company, and the move is part of the efforts to cut the $2 billion in costs over the next 2 years. Meantime, days after the European Union banned TikTok from government officials' phones over security concerns, the US and Canada have also taken the same step. Both the US and Canada have banned TikTok from the officials of the governments, citing security staff concerns. And the US Secretary of State Antony Blinken's 2-day visit to India begins today. He will be attending the G20 foreign ministers meet. Ahead of landing in India, he said that China can't have it both ways in Ukraine, referring to the peace proposal by the country amid the rumored lethal support to Russia.
And back home, LPG prices have been hiked in Delhi. 14 rupees per kg. Domestic cylinders price have been hiked by 50 rupees per kg. In fact, the hike also means that it will now cost 1103 rupees. 19 kg commercial cylinders have been hiked by 350 rupees and 50 paise per cylinder. Also, the Supreme Court has asked the centre to provide Z security or Z plus security actually cover for businessman Mukesh Ambani and his family. In its order, the top court has said that their security should be made available not only in Mumbai but also throughout the country and abroad. It also said that Ambani will bear all the costs of this security arrangement. And India and Australia will play the final test at Indore starting today. India has retained the Border Gavaskar Trophy with an unsaleable 2-0 lead. The hosts, who have 2-0 series lead now, can win the series and book a place in the World Test Championship final with a victory over the course of the next 5 days.
You're the OG of the startup world. You were an investor. You understand this space.
Should I call you? First time somebody called me an OG.
So you don't like the word OG?
No, I'm okay.
It's cool, millennial.
It's millennial.
Your companies are invested in that. I must share one secret with you. 20 years ago when I started talking with Sanjeev, he insisted that I call him Mr. Bikhchandani. But as he's investing in companies now, he says, call me Sanjeev.
I don't think I could have said that.
Right, we've got a jam-packed day and an interesting lineup for you. But in the meantime, let's also find out what exactly the index calls are. And here's what our chartists are recommending. By the way, here's where we've started off in the pre-open rates around the 17,360 mark for the Sensex. We're holding out in the green by about 170 points. Hold, and no trade. That really seems to be the order of the day, owing largely to yesterday's surprise move on the Nifty Bank as well. It's divergent calls. Remember, Kunal earlier this morning as well said that there is potential in the banks. He in fact picked out 2 PSU banks as his top trades. Buy on the Nifty Bank Index, but otherwise it seems to be a consensus hold call.
Okay. Pre-open rates, delivery, You've got Paytm, which is by the way reversed completely, that Sunil Mittal has denied, and I think Paytm also has given some indication, right?
Yeah, they've also denied.
So much so about a news report which somebody puts up, the stock goes higher and the stock comes down.
Yeah.
That is like rampant speculation. It got created by global media and it got dismissed by global media. Who lost? The shareholder here, or folks who've really bought it. So that's unfortunately the irony of poor reporting, if I may say so. Paytm today, by the way, is at 600 rupees. Nuresh, we have to go back to the big four, if I may use the word, or the tech four. Paytm, Zomato, Delivery, and Policy Bazaar. Which is the strongest one for us? Which is the weakest one for us?
So, say the strongest one according to me is Zomato. One, for the reason that it has spent the maximum time consolidating. A lot of blocks have happened, a lot of volumes have happened, and it is available still at that price band. So the stock has been making a base around that 40 to 50 mark. That was the first low around 50 levels in May 2022, then August 2022, and then again in say the start of this year we went to that zone of sub 50 mark. So that's a stock which has clearly made a almost a 1 year of consolidation. So once after a big fall comes, you need a period of consolidation before the trend can start. We've not seen a similar consolidation in any of the other names. So Paytm comes closer to it, which is where again it has made a base around 450, 500 levels. But Zomato seems the better one as of now in terms of risk reward. But going forward, the next on radar would be Paytm. But say Nykaa, etc. still don't have say any confirmation of a bottom being made as such. Forget about the consolidation.
You like Zomato, interestingly, even though it is down 20% in last 3 months and Paytm is up 20%, technically aren't you supposed to be doing the other way, back the strength rather than the underperformance?
So backing the strength works when the trends are positive, when the trends are relatively better. But on a time scale, if you look at the last 6 to 12 months or 18 months, 24 months, 36 months, all these names have underperformed the index. So we want to play strength not just on a 3-month relative strength, but on a longer term time frame also to be similar to the markets. So for now, Zomato has spent that bottoming out zone. So that's the reason. So we are still not taking as a relative strength bet, but rather a bottom up buying case for these names. So that is where Zomato fits the bill compared to the rest of the names.
Trigger happy low. All right, 20 seconds to go. First rates, it's not been a good month. I mean, month is just today, but it's not been a good year, so to speak, at least for market, for trend watchers. It's a month where markets have not really given you any satisfactory move on the upside or a clear pronounced trend on the downside. We're just getting kicked here and there. All right, it's a 51 point uptick for the Nifty. Can it be flat than this? I don't think so. That's a Nifty start for you. It's again a 129 point uptick for the Bank Nifty. The breadth today, at least there is some solace, if I may use the word, is looking better. It's looking meaningfully better than what it has looked in a long time. I'll identify first the stocks. I mean, I'm just not going to go on news per se. Yes Bank up 2%. Zomato flat start but strong volumes. Adani Power 4%. You've got 7% uptick in Adani Enterprises. Yep, 5 has become 6, 6 has become 7, and 7 is about to become 8. Wow, that's Adani Enterprises for you. 60 seconds and 2% has got added. What a recovery it's been in Adani Enterprises. You know, these are the levels from where, these are exactly the same levels from where some of these stocks took support in the month of Jan as well, when the selling had really intensified. So Adani Enterprises is clocking strong volumes. Adani Port is clocking strong volumes. Could today be the comeback? Could today be the comeback day for some of the Adani group of stocks? Reliance is looking strong. And Adani Total Gas, hello. For the first time after moving from circuit to circuit, circuit to circuit, circuit to circuit, I think it is off circuit.
Off circuit, but still in the red, almost about 2%, and these are just the first few minutes. Let's see where it actually goes from here. It seems like it's in a smidge of a recovery mode, however. A couple of other stocks which are going to be in focus. Let's see what Axis Bank is up to, considering they've completed Citibank India's credit cards business acquisition for 11,603 crore rupees. Axis Bank holding up 1% right now as we speak. HDFC Bank and the HDFC Council has said that there have been no objections to the merger at NCLT. Zydus Life, they've got the final US FDA nod for one of the tablets, and the Benicar HCT generic as well. So that's another stock in focus. Federal Bank, that's going to be an important one. The management is pretty optimistic on business drivers. Incremental ROA levers clearly spelled out. Federal Bank, though, marginally in the green as we speak right now. There's BEL as well, which has got a frame supply agreement with Thales Reliance Defense System. So that's another stock which is in focus. And it seems that at the Wadia Group, some reorganization is afoot. Bombay Burma, they're looking to sell 8 coffee estates right now. 2 Orange County resorts for a price consideration of almost about 291 crore rupees. Bombay Burma holding out smartly in trade as we speak. Airline companies as well, I mean largely only Jet, I beg your pardon, Interglobe Aviation and SpiceJet. Jet fuel prices have actually been cut. So that I think is going to be a little bit of a sentiment positive, but maybe not so much for the Mumbai-based real estate companies. I mean, Knight Frank has reported that Mumbai Feb real estate registrations were actually down 11% on year-on-year basis. And remember, this comes on the back of extremely great numbers all throughout the last 1 year. So yes, it was a high base as well into play. Same time last year. But yeah, most of these stocks are not going anywhere really. Delivery, SoftBank is the seller of the 3.5% stake is what we understand, and part of the block deal has already transpired. Delivery now at 341. For the index also, Kunal, it's not looking bad. We're almost scaling up 0.5%.
Yeah, I think it's a good start. Finally, we've started off a day on a positive note, and we are, even in the last couple of minutes, we're building on to those gains. From a 40-50 point gain, we're almost at 87-88 points on the index. And there is evident amount of buying which is there on the large cap front. Recovery for few sectors like the metal stocks are getting into a recovery phase, at least the ones which are beaten down significantly, Hindalco, Jindal Steel, etc. So I believe that possibly if we manage to just sustain this gain of 50 plus points on the index, we could probably expect more short covering to come by into the other indices like Bank Nifty, etc. Would maintain a buy on Bank Nifty as well as in terms of individual stocks. AB Capital is something which would be bullish on at current levels of 144.45, and that's a stock which I would recommend to buy as well as would continue to buy.
All right, Naresh, let's get in your first trades as well as a quick assessment of how we've opened up for trade today.
So a good open on the Nifty and the Bank Nifty as well as the broader markets. I've not yet seen an uptick, but still a flat start is good to go with. Be bullish on the oil and gas space, so that is what I continue to add on to the position on IGL, looking to add on more above 445 levels. So looking at oil and gas as to be the sector which could do really well.
Krishna Kumar Karwa joins us. Let's take our conversation